Our next guest oversees $150 billion in assets under management and says the space is in the process of disrupting the traditional lending model, becoming a first choice for borrowers and increasingly gaining market share from banks. Joining us here at Post 9 is Blue Owl Capital co-CEO Mark Lipschultz. It's good to have you back, Mark. Welcome.
Thank you. Great to be here.
Is that why your stock has now outperformed? It's a play on the boom that's happening in private credit?
Look, our stock does reflect the secular trends toward private credit and really private assets generally. And across all of Blue Owl, direct lending included, our business is about delivering investments that are stable, predictable, generally yield-oriented. So I think all of that in today's more uncertain environment is in favor. And as a business, Blue Owl, the manager, all of our revenues are fee-based. So that makes our model very predictable. So we're growing, and that growth is very, very visible to people.
So talk to us about how you're taking share from banks. Is it because banks are being more cautious? Is it because the Basel III endgame rules have been announced and they hate them? Were you licking your chops? Does that just mean more opportunity for private lending?
The reason private lending, for the most part, is working and today gaining share is we're delivering a solution that works, which is to say, at the end of the day, we deliver for investors a really attractive risk return. And for the users of the capital, we deliver a predictable private partner-based solution that they like. And so, like any product, you have to have a product that wins, a product that provides value. And that's what we at Blue Owl do and in direct lending. With regard to the banks, look, we're fundamentally in pretty different businesses. We're in the business of lending capital for the long term, making a decision about here's a commitment we're willing to make to this company to support its growth for the next 5, 6, 7 years. The banks are, for good reason, largely in the business of moving as opposed to storage, right? At the end of the day, they're underwriting and syndicating loans. They'll be back. The banks will be back in the business. I hope so, because we need that for a functioning capital market, a functioning economy. But private credit is a meaningful part of the marketplace and will continue to be a meaningful part of the marketplace.
Do you see the weight balance between private and the banks in terms of credit? Is it lopsided right now, or do you think how far before you start worrying about it being lopsided?
Well, today it's a very favorable environment for what we do, and that's great. We're happy to continue to provide solutions and earn great returns doing it. And the banks, for reasons, again, that make sense probably today, given the uncertainty. Think about where we are with interest rates. Think about where we are with kind of market sentiment. And if you're in the business of underwriting and then trying to sell on that risk, it's not a very attractive time to take that proposition on. Whereas for private lending, we're making long-term solutions, delivering long-term solutions for great companies. So it's a very good time for us to take that on, and we get compensated well for it.
I believe you just had a big commitment from a large Middle Eastern sovereign wealth fund. How are you deploying it, and what's happening with the overall fundraising market?
Well, we're very fortunate to be partnered with Mubadala, obviously an exceptional organization with extraordinary amounts of capital. And I think they and we alike see this opportunity to lend capital in this market, to take that long-term view, to do to private credit what was done over decades to private equity, which is to create a durable marketplace where we can provide those kinds of long-term solutions. And in particular, they and we alike are focused on the opportunity in software, in technology, the secular trends behind that industry and the quality of those businesses, which has been an area of great focus, particularly for Blue Owl. We have over $20 billion of assets invested in software businesses, lent to software businesses. And as a result, I think we and they together can really continue to create solutions for a really attractive set of borrowers.